I just want to go over the sequence of qualifying. Everything is a ready, aim, fire. And I talk all the time, be careful being short above these pinks, long below these blues. When they reject a certain area where you see sellers coming in to defend, when we get above it, we could run. And so this isn't necessarily the location, like what's the matter with you? You should be long in this sequence. But if you look at how quickly, and this wasn't super quick, but how quickly this pink sell imbalance triangle, because that's what it is, got breached, got rejected. Meaning, if you look at just my cursor, it comes in 335 more people that want to sell it than people who want to buy it in a 3 tick area. And the price doesn't shoot lower, it just hangs there and then starts walking through it. And it's just a better chance of following through when you see that. A rejection of a pink means price doesn't go down and in fact goes up. A rejection of a blue buy imbalance, his price doesn't go up. It hangs there and then goes down, or doesn't even try to go up. It just boom, right back on it. These are imbalances that when you get too many, you have to filter out and maybe just look at the plus or minus 300. But when you see the pattern of them kind of lining up in one area, I mean, this is what markets are looking for. This is what they need to move. They need to go and find price discovery is about trying to discover balance where you get a buyers and sellers that there's enough to create a balance. When there's not a balance, it's an imbalance. And that's when price is going to move. There's no choice. If people trying to buy it and they can't, the price of that particular product has to go up. If there's a lot of people trying to sell it and they can't, the price of that product's going to go down because they're going to keep trying to sell it at lower prices in that example. Another example for this highlight was right at the top of the hour where we had a breakout of the of a box, consolidation box. You don't see it because these are tighter rotations, but I believe it was right in, boom, right in here. We get a face off and it breaks out. Not does it break out 5 points, 10 points, or anything else, but it was the beginning of a move lower right in here. If you take a look at this, was on a longer time frame chart, you could see a little more clear, but this was the box. This is the bottom of the rotation. All right. It's not a coincidence that once it starts tagging it, it's like a pond that's ready to crack. Once the ice cracks, the kids fall through, and there's all kinds of emotions and struggles. That's what price does. So they get some sell imbalances that boom help push it through the ice, and then you get the buy imbalances that get fed. They get filled right away, right? And then where does it come back up to after it breaks down into here? Where does it come back up to? Oh, where the stop started, where the emotion started. And then you can get yourself some follow through. Even though it took a little time, it did hold below our green and red PWAPs. All of this stuff, whether it's the triangles, the PWAP lines, they're all based on order flow. They're all based on people's positions and imbalances that are required to make the thing you're trying to predict move in the first place. Buy and sell imbalances. Blue triangle for buys, pink for sell imbalances. The point is, you have to be able to see a pattern that in real time might give you an advantage for a breakout in this example. You have to identify when and where the market has some buy or sell imbalances, because no imbalance, we're not going to do anything. We're going to go sideways. And then you have to have a fire that gives you the best chance to hit the target. If you're talking about literally firing a gun, you're shooting something. So what gives you the best chance to hit the target? And that is, for a lot of people, the moment something's rejected, something that should happen didn't. In the case of a blue triangle getting rejected and the price goes down, or a pink one comes in and you're going to lean on that one. You're going to lean on a pink triangle and say, above there, I'm short, but above here, I'm out. Or you're looking for a breakout. You have identified the box. You get a pink triangle at the bottom of the box, like you do right here. You jump in. You might not have the follow through, but you put yourself in a position where you're objective to say you know where you're going to get out before you get in, so you can justify the trade, so you're not pissed you missed winners and take losers. Because that's what everybody gets themselves in trouble when they miss trades. I ain't going to miss the next trade. Well, the next trade is a trade you probably shouldn't take in the first place. And had you not missed the first trade, you wouldn't even be looking to take the second trade. So why are you looking to take the second trade? That's how our mind pulls us around. And instead of you walking your mind's walking you. And when it happens in trading, you get yourself in trouble because you look for trades that you wouldn't be looking for had you not missed the good trade. You have to have a progression, ready, aim, fire. And if you don't fire and you should have, it's okay. That's going to happen too. There'll be another deer in a little bit. So if you got tools that generally, if you're having trouble being objective, the first thing is you're probably using tools that are irrelevant and are just random and arbitrary as to predicting whether or not it's going to rain. If you're a meteorologist, you know, and you say, well, I think it's going to rain every time I throw blades of grass in the air. If they fall straight down, it's going to rain. Well, and sometimes that works, but it's arbitrary, right? That doesn't make any sense. Those aren't tools that give you a probability that indeed it's going to rain this afternoon based on ABC. And so if you don't know why price moves, the fact that it's a discovery process of finding balance and doesn't move until it gets imbalance. Imbalance of what? Buyers and sellers, right? How do you get buyers and sellers that are predictable? Longs and shorts.